So today I'm going to be going over a concept that Chris Begg talks about. He's an investor. I've recently seen one of his his interviews online, and it's this concept of clouds. And what he means by clouds is how you look at an investment, you see that, oh, actually, I think this business is going to grow 20%, but then these clouds that are in the way. And a lot of these times, these clouds can oftentimes be negative short term impacts. An example might be a supplier has bought too much inventory, and for the next 2 quarters in a row, your numbers are going to be adversely impacted as a business in terms of year on year comparisons. It might be that the company is getting slandered in the media, or it could be something that's a lot more of a serious threat long term, and that could be something along the lines of a competitor coming in and disrupting the existing business. I mean, this is pretty evident in Google at the moment, where they've really made a big push with their Gemini AI to try and take back any sort of implications that ChatGPT and other sort of AI platforms will take away from its search power and dominance there. That to me is a longer term impact, and a type of cloud which I should take more seriously. Whereas the other two that I saw mentioned at the start, they are something that I like to see, because short term, yes, it does make the company look bad, but if you're investing for the long term, I mean, it shouldn't be too much of an issue, and really gives you an opportunity to buy the business at an attractive price. So that's what I mean by these sort of the clouds, and sort of how Chris Begg talks about it. There are investors that have sort of similar philosophies, but essentially what you're trying to work out is, A, is this a short-term impact and am I okay with this? Or is it a B, a longer-term impact and actually the business isn't as attractive? And even if it isn't, you just need to work out whether you'd still want to buy this position, knowing that this negative impact might be a longer term detractor from the business. So an example might be that Google's search dominance may fade, but then again, they've still got YouTube, they've still got Google Maps, they've still got Google Play Store. So you just have to assess whether it's worth it or not in the end. And I think that's a really good way to frame it. You can take all the sort of the clouds associated with that business, and then see, actually, is this just an amazing time to be buying and everyone's short term fearful, or is this actually, no, hold on, there's something deeper going on a fundamental level? And that's where I think it's been really beneficial for me. I mean, if you look back, Facebook, for example, has been a great one. If you manage to separate the clouds and sort of work out, oh, actually, the Cambridge Analytica scandal, yes, it wasn't obviously great and it was bad PR for them, but equally, it was a shorter term thing that they could reverse and fix the way they were operating, and then later on the business will still continue to thrive, and you as an investor have just had an amazing opportunity to buy this company at dirt cheap valuation.